What is up, everybody? It is Koinonia Trader here. I'm going to take you through how I got this 25k eval from Apex and how I was able to take trades according to my strategy to be able to pass it in just a couple of days. So if we look here on the calendar, I actually started this evaluation on the 19th of December. That was when I took the first trade with it. And then it took about 7 trading days to be able to pass this and hit the 1500 threshold for the profit. So here on the screen you see that I have 1,631 in profit. That's without any commissions because TraderSync does not track commissions. So just taking a look at the overview of the equity curve here, you can see we have some red days or red trades, and then it starts to just have a uptrending equity curve overall. And then eventually today was the day that I passed the account and got it to be funded. So the biggest thing that I want to take a look here is just the metrics behind, the trade. It's the trades that I took. If you look to see, the biggest interesting thing is if you look at my profit factor, that's essentially how much my risk to reward is on average by trades. So here you can see that I have a 2.46 profit factor. So that means that for every dollar that I risked, I was making $2.46. If we continue to go lower, you'll notice that I actually had a pretty bad win rate for December on this account, which is interesting, right? Because people tend to think that a high win rate is necessary to be able to, be profitable. And as you can see here, it's obviously not the case. I have a 41% win rate on this account, but because of my profit factor being so high, I was able to consistently make returns on this and be able to pass this in 7 trading days. So if you look here on the right, these are all of the trades that I took. And one of the big things that I want you guys to note is how my losers are pretty small in comparison to how big my winners are. So the first trade that I took on the 19th was a short that made $293 in total. The next day, I take a loss of $290, and then I give myself one more opportunity to be able to make back that loss. And so I allow myself to have pretty much on this account, I was risking about $250 per trade. Sometimes a little more, sometimes a little less, depending on the setup or depending on whether I cut the trade early or not. And allowing myself to have 2 opportunities at the market per day. If I'm unable to understand the market that day, after 2 losses, I walk away. So the most that I would be losing would be $500 on a day. So here, the first trade actually was a little bit heavier than usual. I lost almost $300 on that one. And then I waited patiently for the next trade and made it back. And I made $440 back. And so I was able to end about $140 in profit that day. Then on the 23rd, same deal. I lost $105. The next trade that I took that same day, I made back and I came out winning 20 something dollars. The 26th, I made $200. The 27th, I took 2 losses here, and this equated to essentially 1 loss because I believe I cut it early. And then look at this. This was by far my biggest trade. I remember this trade was a 1-4 risk to reward, and I had so much conviction on that trade that I held the position and it hit relatively quick. So we can actually go through each one. If we click on the trade itself, we can see here, does it show the loss that I took this day? Yeah, right here. So as you can see, this was the trade that I took. This was a win, right? That first trade that I took, I saw the inversion fair value gap right there. And this was during the 1050 macro. Inversion fair value gap hits the low of day, and that was a 1-1.3. The next trade was the loss that I got here. It was a $290 loss. Zoom in on that. Again, same kind of setup. It was within a macro time frame. I believe this one was a little bit outside of it. I took an inversion fair value gap setup thinking that we were going to reject, or sorry, to reverse off of the morning's run up, and that unfortunately got stopped out. Then the trade after that one made me back $440. So let's zoom in on that one. It looks like it was right here is where I ended up going short and I got stopped out. Immediately I flipped because I realized that I was wrong and I went long. I believe my stop was this low right here, and I took the majority of my position off here. I don't remember if I ended up taking any runners on this one, but I went a little heavier on that one, I believe. And then the next day, it's essentially the same trading model every single time. You'll see here, this one was a continuation play, an inversion, fair value gap, all within the macro. This one I went short and I got stopped out. Or sorry, I think that one I went long. Let me double check. Yeah, I went long on that one and I stopped it out myself. And the trade ended up running without me because of that inversion that it created after the fact. So I was very conservative with it. If I saw that I was not in the right, like right here, this inversion fair value gap that I created, I stopped myself out at $100 loss. And then after the fact, I noticed that, yeah, we created another IFEG still within the macro, and I bought right back in. And then because I ended up in profit that day, this day was a little tough for me. I remember this day. I decided to just take off the gain right there, and it continued to run up to my take profit, which was up here. And those days I don't sweat it much, right? Like it is what it is. If I lose or if I cut it early, it is what it is. Here, same thing. I took an IFEG play within the macro right here. This was the IFEG that I took. My stop was below that swing low right there, and had a little bit of drawdown there, and then it ran on up and it hit my price target, made $200 that day. Next trade was a loss. I believe I tried to play a continuation. Yep, IFEG right there, all within the macro time frame. Stop loss hit right there. Waited patiently once again. Tried another. Right here was my first loss. Tried shorting again, and I saw that it was not going my way, so I stopped myself out. And then this was the trade that ended up being a 1-4, because I realized we're not going to continue going lower, and so I entered in long right here. I knew this was going to end up inverting because of the fact that we had already inverted here, and I put my stop loss below that, and I targeted that high right there, and as you can see, that quickly ran up and smacked the full TP. And I believe that was also within a macro time frame. Let's check. I believe this was the PM session macro. Yep, from 110 to 140. I got in around 130. So I'm always implementing time into my trades, and I'm waiting patiently. And if I lose one trade, I wait for the next one. This one, I actually ended up taking a trade in the London session, and that obviously did not pan out. I went lighter on that one because it was the London session. I was up for it and I saw it. I thought I'd give it a shot. Here, 10-10 macro. Tried going long, thinking that we were going to go higher, and I got stopped out very early on this one. As you can see here, I put my stop loss right here at this low when it should have really been there, and that would have kept running on up. This trade here was, I believe, last Friday, or this was yesterday. Same thing, I got in. I didn't have the confirmation. If you guys look at the trade recap from yesterday on my TikTok, you'll see that I entered in this trade. I noticed that I was breaking my rules on it, and so I exited the trade completely because it was against what I was supposed to be doing. And then this trade here was within the macro as well. All of those trades were within macros. And then here, got in at the 1150 macro, stop loss below here, and I targeted this high right there, and I took my gain off, and here I made 328 back. So ended up really nice on the day. This one is, when did I take this trade? It doesn't show the chart data, but This one, I believe I only took 2 contracts, small risk on this, lost $44. Then I tried, I believe this was also during the London session. Yep, I tried one more time with just 1 contract, lost $50 on that one. And then this was today, this morning, I took a trade for the 950 to 1010 macro. You see the time right there, and I let it hit my stop loss. I had 2 contracts and I lost $100 on that one. And then I took this trade again, 1050 to 1110 macro, waiting for those macro times, because first it's always time and then I look for price to align. And this one ended up hitting my full take profit. And actually, I didn't even get to the full take profit. I took my position off right where I would have passed the account. So yeah, I mean, that was all the trade. I took 17 trades total, and that was it for me to be able to pass it. So it's definitely possible. You just have to be patient. Like I said, don't focus too much on win rate, okay? Because if your risk to reward is there, then it's there. You know what I mean? This looks like I'm wondering if this is the risk to reward. Average profit on winning trades divided by the average loss on losing trades. Oh, this is like over the realistic timeline of how many losing trades I had, and then the average of my winners, and it ended up being a 3.5 to 1 in terms of dollar amounts. So for every dollar that I lost, I also had trades that would make me $3.50 back. And then I believe this was off of the trades that I took was a 2.4. So yeah, I tried targeting at least a 1 to 2 every time. And yeah, as long as you have a consistent approach to risk management and you just continue to just do the same trading model every single trade, that you have a model that shows that it is possible to do it and has a good win rate. And if it has a lower win rate that has higher risk to reward, which is like how these trades were, and you know, it'll pay out. You just have to be patient and take it day by day. And then in terms of gains, right, this is all relative to sizing. If I doubled the risk, instead of risking 250 each trade, but instead risking 500, this gross return would have been $3,000, right? That would have been on a 50K account, but this was a 25K account. So yeah, it's definitely possible, guys. I mean, this is to show you how to be able to trade in a very consistent approach to be able to pass it, and just to show you guys that, you know, don't sweat it too much. You can definitely do it. A lot of it is all mental. If your mental is not right, then forget it, because you're going to end up revenge trading. If you have no set risk management rules, like I said, I have a max dollar loss that I like in a day and a max trade amount that I like to take in a day. 2 trades max typically. Some days I do bend because, you know, it depends on the max total loss. And I wait patiently every single time. So I hope this video was a little insightful for you guys. It was just something that I thought I could create to show you that it's definitely possible to pass these prop firm accounts as long as you have a consistent approach to risk. And yeah, I mean, there were no red days on December, even for it being a very tough month. So, all right. So I hope you guys enjoyed the video, and I will catch you all next time. Peace.